All right, Candle Range Theory Trader back with you with another video talking about mastering the midweek reversal using the Candle Range Theory. So let's get into it. Now, the benefits of trading only the midweek reversal or MWR for short are as follows. You only have 1 to 2 days of trading. It can offer very big profits. We're talking about like a 1 to 5 risk to reward ratio. It's going to give you some fairly small stop losses in the grand scheme of things for the most part. It gives you an easy exit because you know exactly where your price target is and you know how to spot when the pattern is being invalidated. There are a couple of drawbacks though. It's not good for day traders who crave action. You feel like you have to trade every day. This isn't for you. And you actually have only one shot at a trade per week. So that means that if your setup does not occur on Wednesday, you got to wait till next Wednesday. Okay. And sometimes that might be frustrating for some people. So let's get into it. This is the pattern of the midweek reversal. Now, will it look exactly like this every single time? No, it will not. But the concepts that are being portrayed in this chart are the most important aspect of it. So the rules are as follows. We are looking for number one. Let's explain this candle here. This is a weekly candle, and then the 5 days that make up the week. So I hope you can see my mouse here. If the candle's green, it always opens right here. So this is Monday's open and Tuesday's open. So typically, not always, but typically we like to see the week start off on a downtrend, okay, for Monday and Tuesday. Tuesday, definitely. And then something curious happens on Wednesday. Wednesday will poke below Tuesday's low and then close above, okay? At a bare minimum, it needs to close inside of Tuesday's daily range. But the main part is that this creates the low of the week. And then the same thing in reverse for the bullish or bearish example here. You have a 2 up days, Monday, Tuesday. Wednesday creates the high of the week and then trends down for the rest of the week. Now, this is the non-negotiable. This is the, I guess you could say, the invalidation point. If price breaks above what you believe to be the high of the week or breaks below what you believe to be the low of the week on Wednesday or Thursday, it's invalid. All right. It's not a valid midweek reversal. Cancel it. This is the general framework. The non-negotiable is this: Wednesday's low must hold if you're long. Wednesday's high must hold if you're short. Okay, so Wednesday is your trading day. I'll talk about entries in just a second. But the main characteristics of the midweek reversal are that the only trading day, of course, is Wednesday, as we just talked about. The daily candle must close above Tuesday's low if you're long, or below Tuesday's high if you're short. Sometimes it may close near it, so it's not 100% accurate. But at the same time, the high or the low of Wednesday is the non-negotiable. As I just said, if it's broken, there is no trade there. So you have to pay close attention to the daily candle closes. Wednesday's candle, at a minimum, should close inside Tuesday's range, ideally. Now, there are two signs of strength in terms of the odds of price continuing in the direction, because remember, when we're looking at a reversal, see how price continues up once the reversal takes place or continues down after the reversal takes place. So these are the main signals that you want to look for. If Wednesday's candle closes inside of Tuesday's range, that's like the first one. That's good. It's not the best, but it's good. That's you have to have that. A better sign of strength is if it closes above the weekly open. All right, there's a weekly open price that you have, and if price closes above that if you're long, or if it closes below the weekly low if you're short, that's an even better sign. And the best sign is if, let's say you're short, or let's say you're long. If you are long and Tuesday's candle gets closed above, meaning that basically you're just looking for this right here. If you get a Wednesday close like this, where it's above the weekly open, this is the weekly open right here, and this is Tuesday's high right here. So basically, it's this chart right here. If Wednesday pokes below Tuesday's low and closes all the way up here above Tuesday and above the weekly open, this is the strongest sign that the reversal is legit. And the odds, it's not, of course, 100%, but the odds of price continuing in the favor of the trend that should be underway is greater than the other two signals that I just went over. So you're going to see one of those three things. So I'll explain that further as we go through different examples. But just remember that you have a good sign, a better sign, and the best sign. And the best sign is when you get this type of close right here, a strong close above the weekly open and above Tuesday's high if you're long, or below the weekly open and below Tuesday's Tuesday's low of day if you're short. All right, so just this. Okay, look at the candle closes. This is a daily chart. See how it closes right here on the reversal day? This is the strongest sign. Everything else is just it's decent, but not as strong. So remember that attention to detail is key. If you take an entry on Wednesday, you need to see a strong close or something that fits into the criteria that I just gave you. One of those three things. So let's look at some examples here. Okay, so this is just a daily chart of a week. So you have Monday, Tuesday. Here's the reversal day, Wednesday, right here. So I'm going to go over the signs here because I just talked about Wednesday's candle close. So what do we notice about Wednesday's candle close right here? See how it closed above the weekly open and above Tuesday's low, but it did not close above Tuesday's high, which is right here. So this is like the second. This is a good sign or a better sign. Good is the bare minimum. Better is something like this where it closes above the weekly open. But the best sign, obviously, is for it to close above Tuesday's high if you're long. Here's another example right here where this is the better sign where you got it priced. This is the reversal day here. Low of week on Wednesday, closes above Tuesday, closes inside Tuesday's range, but the weekly open is all the way up here. So, I mean, that would be a fairly large candle. It just didn't get there, but it still gave you the low of the week. And Thursday would have been your payday before price retraced on Friday, which does happen. Okay, so let's look at a couple of short examples right here. We have Monday, which was a doji, Tuesday, and then Wednesday creating the high of the week. Look at this close. This is one of the better signs here. See how price closed all the way down here? Did it close below Tuesday's low? No. But it did close right at it, and it closed below the weekly open. That is awesome. That is awesome. Okay, that's a great sign. And see how price just continued down. And then another one, this is the better sign right here, where you have price going above Tuesday's high, closing inside of it, did not close below the weekly open, but Thursday did, bang, and then Friday, bang, gave us more action to the downside in a short example. But remember, so you know when to get out if Wednesdays does not close typically inside Tuesday's range here, if it closes above Tuesday's high of day, it's not a reversal, okay? Even though price may reverse sometimes, that's just to protect your downside. So now let's talk about entries. So all of these are going to show the daily chart first, and then the 15-minute chart where we take our entries. So your entries, where do you get in at? Okay. Let's not overthink this. I'm not talking about any order blocks or fair value gaps. You don't need really any of that stuff. All you're doing is just thinking in your head, okay, once price gets here, then I will do this. And that's it. And what is here? It's the low of Tuesday. You need to see, this is the price action you need to see. You need to see price go below Tuesday's low and then start to go up. Once one of the 15-minute candles closes above Tuesday's low, you're in. That's it. Stop loss can go below the low of the day. That's all. Very simple. Okay. Same thing for a short example. Once you see price go above Tuesday's high, close back inside of it. Tuesday's high of day is your entry range. You're okay to get in as long as price is below the daily open price of Wednesday and above the Tuesday's low. So this little window right here where my mouse is, that's your trading zone right here. Some ranges will be bigger than others, but again, see this where this line is? Your entry is either right here or above the daily open. Okay, and then bang, you're going to get all of that if you get the direction right. So let's take a look at some examples here. So this is New Zealand yen. So once again, notice how price went down, closed above. So our entry window is right in here, but let's look at it. This is a 15-minute chart. This green line here is Tuesday's low. So here's Wednesday. Wednesday go below, closes inside, gives us a little bit of drawdown, but that's fine. Comes out a little bit, and then bang, okay? This was an entry good for 10 a.m. Eastern Standard Time on Wednesday. Virtually no real drawdown, some consolidation here, but then price really took off. Thursday is typically going to be your best payday when you take a midweek reversal. All right. So, I mean, you can't, this is the only thing you're looking for right here. Down, then back inside. Once it closes back inside on Wednesday, I'm in. Done deal. Okay, next. Okay, so notice how Wednesday's candle closed inside of Tuesday. Okay, so you want to just monitor where does Wednesday's candle close, and it needs to close inside Tuesday's daily range. So, but again, our trading window is right down here. So let's drop down to a 15-minute chart. See how price went outside on Wednesday, went back in. You had one opportunity all the way back here, but this is USA session right here. where it went out a little bit, but the low of day should always hold. So this was the best entry right here at about 845. And then bang, virtually no drawdown, straight line up to take profit. This was a 10 pip stop loss, 50 pip take profit at 8:45 a.m. Eastern Standard Time. I mean, it doesn't get any better than that. So this chart is this on the daily chart. Okay, this was Wednesday, and then expansion to the upside right there. So this was Thursday, that price action right there. That would have been good for 50 pips. Then a short example here on New Zealand CAD. So notice how Tuesday's high is here. So very thin window right here between the high of Tuesday and the daily open. But let's see where our entry would have been. So right here at about 1:45 a.m. Eastern Standard Time. Now, am I up normally trading this time frame? Not really. But for New Zealand pairs and sometimes the yen pairs, they can move during Asia or like around 1, 2 in the morning. It's not uncommon. So if you see something like this, where Tuesday has ended near the high, and then Wednesday, you could just set a price alert, and if you could expect price to possibly give you the reversal on Wednesday, once you see price heading down, you want to go ahead and start to get in. Now, you may have been stopped out a couple times here, but that's where you just manage your risk. But eventually, it did give us what we wanted to see. And at 1:45 a.m. Eastern Standard Time, price tanked, and it went for this was a 15 pip stop loss, 75 pip take profit. That's for 1 to 5. And then as well, we have Swiss yen, where we have Monday, Tuesday, okay, then Wednesday creating the high of the week, closing inside. And then this Swiss yen, I went all the way down to the prior low of week and then started to retrace. Okay. But notice how once again, Wednesday closed inside of Tuesday's range. So we're expecting the continuation, which it did do. And then it started to come back up. So don't be greedy, okay? Because this candle right here, which is actually a Thursday, this week isn't over yet. This trade took place today. But this trade, well, this candle was solid red at one point. And see how it came all the way back up? It could be green right now, as a matter of fact. So 1 to 5 is definitely more than enough to do a reversal. And even if it doesn't reverse and price continues to go up, you took the setup and took the opposite side of the range and you're good. The price isn't going to go down forever or up forever. So that's just not how we really trade. So this is the 15-minute chart of what I just showed you on Swiss yen. Entry would have been at about 8:15 a.m. on Wednesday. Price, you may have been stopped out a couple times here because you see here how it went below the range, came back up, went below the range, came back up. But eventually, sometimes people look for like 3 hits to the high, 1, 2, 3, and this was the last hit right here. So came back up again a little bit, but this was a 15 pip stop loss, 75 pip take profit, even though it did go for more than that. And notice how it didn't come back outside the range. Eventually, once it gets settled in, as the move starts, it's going to go and just not come back until the take profit is hit. So that's it. We'd like to see price stay below Tuesday's high, that red line there. So in conclusion, pay attention to detail and where Wednesday's candle closes. Okay, if you enter a trade and then Wednesday doesn't give you that strong candle close that I just described, exit the trade. Just take a small, just scratch out, just forget it. Okay, it needs to have that confirmation on the close. Okay, for Wednesday. Be sure to set your take profit because price can always come back. No method is 100% perfect. You may think you have a midweek reversal. You'll get 50 pips, and then all of a sudden price comes right back up and continues up. That can happen. All right. Practice scaling into your position for bigger profits. I like to try to have all my entries in one 15-minute candle, starting with a small risk first. And if I see price continuing to move in my favor, I'll add a couple more. But just be careful with that, and obviously don't over leverage. And just one successful midweek reversal can be enough if you practice good risk management and go for large payouts by adding contracts. So a 1 to 5, if you take, for instance, let's close with this candle right here, or this chart right here. If you had about 4 to 5 entries right here, let's say you took one right here, 2, 3, 4, and then 5, just all in this little area right here, and price starts to just go down tremendously. Okay, this is the same as taking 4 50 pip or 4 75 pip winning trades. Okay, except you're just doing it all in one instead of taking 4 different pairs, right? So if you scale into the positions on just one midweek reversal, it's virtually the same thing. So that's why I say if you just master this concept and just say, you know what, I'm going to wait for the most perfect midweek reversal setup I can find by monitoring a few pairs. And then when I see this type of setup, when I see price start to break below Tuesday's high and give me that expected reversal, I'm just going to scale in. I'm going to get 200, 300 pips total. Okay, total, even though it's a 75 pip move, that's 75 pips per position, right? Or 50 pips per position. So if you had 450 pips, let's see if we go to this one here. Let's see. Yeah, this one here, let's say if we scaled in, let's say we just said boom, 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 boom. As we see price start to go up, you did 4 entries as this candle started to rise, right? That's 200 pips in one trade. 50, 100, 50, 200. All right. And just one trade, instead of trying to find 4 50 pips trades, you just find one. And then you're done for the week. You've got 200 pips in 1 week based on one trade, right? And if you've got, let's say, for instance, you're making $5 a pip, 5 times 200, that's $1,000 a week. This is $1,000 trade I'm showing you right now. Okay. If you had it at $5 a pip. So, but of course, you have to have the account size to be able to manage that. So, once again, risk management is still number one. Do not over leverage. Don't get greedy. Set your take profit as well if you do this, because remember, just like I showed you here on the yen, see how it was solid red? Price can come back. So you're going to be sick if you would have missed out on all this profit thinking price is going to continue down forever. Okay, once it starts to hit a prior week low, you definitely should go ahead and just take your profit, make a withdrawal, and be satisfied with that. So I appreciate your time and attention. Go back and back test this. Look for those Wednesday high of the weeks and look for Wednesday's close as well and those continuations. Build your screenshot library and sky's the limit. Just keep going. I appreciate your time and attention and have a great rest of your day.